Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The busy week for your money. Investors watching the Middle East, the Fed chair on the Hill over the next couple of days. Any developments, of course, on trade. We are trading all of that with the investment committee, as always. Joining me for the hour today, Joe Terranova, Steve Weiss, Amy Raskin, and Bryn Talkington. We will check the markets here as we continue to watch almost everything. We're green still across the board. Feels, Joe, like we're a little bit of wait and see what happens in the Middle East. Retaliation by Iran, what our next move might be. Thought it was interesting, the move in oil, up a little bit. Now it's down. The dollar was up against the euro and the pound. Last check, the dollar index was down. Rates were down. What do you make of all that?
6 p.m. last evening, if you watched the opening of the market, you had the expectation based on where everything that was markets were opening that ultimately this could be a moment. Maybe the black swan event was unfolding for 2025. Oil up near $78. S&P futures down about 60 handles, and everything quickly reversed. It quickly reversed, and I think the follow through since then is signaling some form of a message from the market which emphasizes the resiliency of the market. Now, you don't have to embrace that. You don't have to embrace the resiliency. You could push up against the resiliency, but you can't ignore the resiliency. One thing I think is remarkable and has to be shown, if we could show the chart of the EIS, that's the Israeli ETF, which I purchased on that down day of Friday, June 13th. If we could throw that up, that has now reached all-time highs today. And I think that just speaks to this message in the market that you can't ignore, that there is remarkable resiliency. And then, by the way, today, you got a little bit of a pullback in yields on the chatter that the Federal Reserve might be facing a little bit more pressure to act quicker than they expected.
Bowman made some comments regarding, which sounded pretty dovish today. Raymond James, Weiss, tries to game this whole thing out. They say increased escalation, short-term higher oil rates, the U.S. dollar, and mentions of stagflation in the media won't be good for equities. Decreased escalation or a resolution is likely to mean the reverse and reward again the buy the dip crowd. The market maybe is making a bit of a statement today, as yep. Joe said, but how do you see it?
I don't know where the dip is from what's happened in the Middle East. There really hasn't been one. It's been trading as usual. But it is the kind of market where if things are put to bed and everybody, steps back from their position, then the market will rally, because this is a market that only knows one direction, basically, and that's up. And that's what concerns me. Now, I'm fully invested, and I'll address positioning as we get closer to earnings, because I'm not as optimistic as others. But, I was at an event this weekend, and there are a number of investors there, and I got to tell you, this really didn't come up in conversation. We talked about oil for maybe a heartbeat, and that was it. Keep in mind, with the U.S. being in such a strong position as an exporter of energy.
Yeah, and a producer of oil.
Right, that we can cut off, if you really want to, you can cut off the exports and just use them here, right, in order to keep oil down. Saudis, they may also be willing to produce more. Nobody wants Iran to have a nuclear bomb. And it's in the interest of every Middle East country as well. So they may say that they disagree with the U.S. strike, but it was the right thing to do. And I got to believe behind closed doors, they're all giddy about it. So I think that this is much ado about nothing.
So then then new highs are just back in view. They are 3% on the S&P
right,
away.
They are in view because hopefully you'll have some room, you'll make some ground up on the tariffs, which have not been, and then we'll get to earnings. That'll be a different story.
What do you think?
I think that's the tariff issue is the big issue. We're
right.
3 weeks away, less than 3 weeks away from July 9th. The longer we don't talk about tariffs, the better it is for the market. So actually, all of the emails that I got this weekend was report after buy the war. Wars tend to be inflationary. Those tend to be better for equities, at least over the last few decades. But I do think we still have July 9th looming out there, and there needs to be a resolution about that. I think it's going to be hard to get a new high before that, or really a sustainable, durable new high before we get resolution on that, because it's just the range of outcomes is so wide.
A couple of pretty dovish Fed comments of the last 48 hours, if you only count, the trading days as those 48 hours. Bowman today, Bryn, and then Waller the other day saying, look through tariff inflation I'd be willing to cut in July if all things are equal and you don't have a big issue between now and then on the inflation front. So you got that, and then the market clearly seems today to be trying to look through whatever's happening in the Middle East, unless, of course, something takes a bad turn, and then it'll have to assess that in real time. But for now, what do you see?
I see that we could easily have 2 rate cuts this year. The Fed has been it's very tight right now in terms of, we'll say, the Fed's financial conditions. The markets aren't tight. But I also think we already had our black swan event for the year. That was April 2nd, the poster board, which caught everybody by surprise. And so I think it's pretty rare to have 2 black swan events in the year. I think the market has really digested, anesthetized, and somewhat moved on from the trade, the tariffs so far. I think you're going to end up having the bill passed in whatever form that looks like. That's a positive. I think you're going to have trade agreements of some sort. That'll be a positive. And I will say that in Q1, earnings actually grew 12%. So in that kind of environment, I think that you could punch above an all-time high, which we're a whisper right now. But I agree with Amy. It just doesn't seem probabilistic that we would do it right now before earnings and with all of these other, we'll say, temporary unknowns that the market will have to climb that wall of worry. But with growth strong, unemployment's low, if the Fed cuts 1 or 2 times, I think that just continues to be a positive. And there's only been one time to buy the dip, and that was the week after April 2nd. Everything else has just rallied or since then. So there hasn't been an opportunity to buy the dip until that week. Some
interesting technical commentary today, Joe. Roth says, if there's a fly in the ointment, that's what the terminology they use, it's the breath. Broad-based New York Stock Exchange shows just 44% of its members are above their 200-day. Hard to have a convincing bull market when over half the stocks are below trend. Jonathan Krinsky at BTIG says risks are elevated heading into month end. You've got some medium term. The bulls have the upper hand above 5,800, but they think there's more risk coming and the level gets tested sooner rather than later. So how do you we talked about the fundamentals,
yes,
and there's a lot of unknown baked into that, but what about the technicals on top of it?
Okay, so I'm not going to take issue with either of those perspectives on the technicals. I think what that means for the viewers, what it means for me, is maybe you're not enthusiastically buying at these levels, but I don't think that means that you're taking the other side and you're aggressively selling either for a larger retreat. I think what we see in front of us is that the third quarter can have many challenges for a variety of the reasons that Amy suggested with tariffs and Steve's concerned about a deterioration in earnings. But I do think on the other side in the fourth quarter, you're going to benefit from the tax bill, the regulatory relief, and the potential that the Federal Reserve cuts. So don't go too far away from the market. Yes, the market could fall 57, 5,800 very easily, but I look at that as a pause that ultimately would refresh.
Do you think it's dangerous to get too negative?
Yeah.
As this market continues to prove to people who have been more bearish or cautious, it really has been a resilient market in the face of pretty much anything, except for moments here and there, right?
Agreed. And 5 years ago, which was a different market, forgetting about the pandemic, I'd probably be, 20, 30% net long. But this is a market that makes a fool of you if you're not fully invested. But you got to be in the right areas. It's not as if every stock is up. You still have almost half the stocks below their 200-day moving average.
Well, that's what we said. Just 44% are above their 200-day.
Right. And I'm emphasizing that. So, look, my positioning is predominantly in the large cap tech that we've talked about that have done pretty well, and I'm staying there, and that's Meta, Microsoft, Netflix, and then idiosyncratic stories such as FTAI Aviation, and Leidos. So that's where you make it up. So it's really a question of positioning, as you pointed out before.
Yeah. So, Tesla's a big story today, Bryn. Let's address this. The limited launch of robotaxis in Austin on Sunday. UBS raised their price target to $215. Okay, stock's at $354. They reiterated their sell rating, so they remain negative, even if they bumped their price target well below where it currently is. Dan Ives was overjoyed by the experience. I mean, how else do you describe it? He says the golden age begins. I'll leave that wherever. The point, though, is that Elon Musk has bet the farm on this. He's bet the farm on autonomous. Are you optimistic as a shareholder that they're going to deliver?
I think when I look out 5 years, robots, autonomy, licensing FSD, just not FSD, solar, the collective of the company, I think is very positive. When I looked back over the weekend at my returns and my trades, I've actually made more money selling calls on Tesla than on the stock itself. And so I think that's where investors need to understand right now, is that I think that 380 to 400 is a cap. We saw last week when he quit the White House or what have you, it got down to 280. And so I think that the challenge to me to get above 380 to 400 is that actually the current business, which is cars, those underlying fundamentals are eroding. And so I think there's a lot of premium in the stock, and I do think I would never underestimate Elon and his team, but I still feel like selling calls against the majority of my position is going to be a way where I can have a better total return than just being long only at this point.
That reporting for us, always a little bit of we don't know.
Yes.
When it comes to this company, we don't know what the sales are going to ultimately be. Do they match the projections that are put out? Will this end up matching the some of the hype and the hyperbole that's been around all of that? Of course, we're doing the 420 thing again, too, which I'm sure everybody's taking note of as well. Yeah,
I'm sure Waymo's taking note of that as well, because they're charging a much higher price. So this is a very deflationary effect when you're telling me this is $4.20. I'm not sure. I think Waymo is somewhere around $15 or $20 for a ride. But this comes in a moment where we don't know, but it's critically important that we do know, because to Bryn's point, you've seen deterioration in the revenue growth for this company. They need something to revive that revenue growth, and a lot of the analyst community is expecting that ultimately this is what it's going to be.
You have a decision to make coming up. You're going to be thinking about your rebalance in literally a matter of days.
So the rules at the end of July will really have this convergence of two factors, one of which continues to deteriorate, and that's the quality factor. The quality factor on Tesla doesn't look good. Now, you've had a 38% recovery so far quarter to date, so the technicals and momentum look a lot better. But, it kind of just snuck into the portfolio. 125 holdings was probably ranked right towards the bottom, so it snuck in. I don't know if it can maintain that, but I'll say this. 10 to 20 vehicles being monitored, I'm not so sure you get very excited about that until you have the firm evidence that they could scale it, that you're talking about 1,000 of robo-taxis in LA, San Francisco, not just in Austin.
You know what nobody mentions, and we've heard three people talk about it? Profitability. This is not going to be profitable for them for a long time. It's not like Uber, where the costs for maintenance, the cost for insurance, the cost for the vehicle are absorbed by the driver. So all Uber does is split the cost, right? They split the fare, rather. So with these, and I've got this from good sources on Waymo, it's going to be a long, long time before they make money. Number one. Number two, Waymo is cheaper than Uber. We reported last week that, and I was just in San Francisco, rides were under $10 wherever you're going in town. So substantially cheaper.
But Waymo's more expensive.
Right, but they're not going to stick with that cost. That was just media. He's great at playing the media. To me, I appreciate Bryn's perspective, and she's been dead right on this and made a lot of money on it. I still think it's the most overhyped stock on a long-term basis that I've ever come across.
And you do this organically, or have they already proven that maybe not, and they need to go out and do something big and bold, the likes of which they don't really do, but maybe this time's different?
Yeah, I'm going to be in the minority on this, but I'm actually very happy that Apple has not engaged in this AI race and spending the billions and billions of dollars for what could be potentially a questionable return. So I'm actually, if they went out and bought Perplexity, it would be a nothing to them. I mean, it would be they have so much cash flow that it would be fine, and I think it would be more of a spoiler for everybody else, because if they put Perplexity on their phone, that would be detrimental to ChatGPT and Microsoft and Facebook and everybody else that is trying to get into this race. So I think it would be more of a negative for others than it would be necessarily a positive for Apple. But I just read a report on Bloomberg. Grok is spending $1 billion a quarter, $1 billion a month on equipment, and with $500 million of revenue. Like the spending for AI is out of control. And when we talk about revenue and returns and profits, like they're nowhere to be seen yet.
I would be very surprised. That's just in the biggest, pipe dream conversation that we could have. This kind of thing gets announced. I'd be shocked if Apple stock didn't go up quite nicely on an acquisition like that.
Absolutely. The question is, what are they missing? Are they missing the intellectual capital, or are they missing the technology? I think that's the biggest question right now. What is it that they don't have?
I don't think they're missing the intellectual capital. I mean, somehow they just haven't been able to do what the investor community has wanted them to do.
I've been saying for a decade that Apple doesn't innovate, and everybody said, oh, yeah, it's ridiculous. They copy well. Well, guess what? Here's where you can't copy. You need your own AI engineering talent, which they obviously don't have enough of or spent enough on. Keep in mind, Apple, of all the big cap tech companies, spends the smallest percentage of their revenue in R&D. So now you can't copy it. Now you have to innovate. And guess what? They can innovate design, but they can't innovate functionality.
So maybe they just do an acquisition. Maybe that's why this time is different.
But Steve's saying they don't have the talent, and I think that's
he doesn't know. You don't know whether they have the talent or not.
Sure,
but they're missing something.
That's a guess because they haven't been able to do it, while others have.
So they're clearly missing something. Perplexity's not a big company. Perplexity's only a couple of 100 employees.
It's a search company.
Right. I mean, so, yes, it's low-hanging fruit because it's not that expensive. 15, 20 billion gets it done. That's not big of a deal. But remember,
15's not getting it done, because if it's raising at 14, 15 ain't getting it done.
25, call it 25, 30, right? But they're sitting on nearly 130 billion in cash. But I think, to your point, they have to do something. They do, and I think the stock will rally.
I'm not saying they have to do something. I'm posing it to you all. If they did something, would the stock react? I don't know why. How would investors not like it?
They need AI because it's the price of admission now. So whether it's profitable or not for Microsoft or for Meta or for anybody else, the point is they have it, so Apple needs it.
The perception of the market's clear, Bryn. The market believes that Apple's behind. No, that's not my point of view. That is not anybody's up here. The facts are the facts. That's what the market believes.
They are behind.
The question is, if they do something bold, does the market view it differently? That they can catch up, if not overnight, close to it, rather than try and do this organically like they've been attempting to do to date?
Where Steve is spot on about innovation, or where they have innovated so effectively, is with hardware. Okay, with the glass, with the thinner design, with the original iPhone, with Johnny Ive. They have never been an innovator, as far as I remember, in software. And this is a software issue. And so I don't think they have the right people there. That is why Meta will pay $100 million just signing bonus while they're bringing people. That's why Satya partnered with Sam Altman, is because they also did not have the intellectual prowess to be able to do this. And so
is that going so well? Is that going so well, though?
Yeah.
I mean, it was all
going well for Microsoft stock.
Financially, it's going great.
Stock, it's going very well.
Obviously, there's a divorce.
Right. It's going very well. Mm-hmm.
Well, I mean, I don't know.
So
There's, some of the commentary and the reporting recently might suggest otherwise as to what the future of that relationship truly holds. But Apple obviously needs to do something, whether it's by themselves or through an acquisition. I mean, they need to turn the narrative around. It's clear that the market has placed its vote.
Yeah, it's clear also from what they've produced. They've continually pushed back the introduction of real AI features that are frustrating consumers. If you went out and you bought an iPhone, the iPhone 16, and the promise was you will have these AI features, and you don't have them yet. So they've got to do it for their reputation. Now, for me, my standpoint, I wouldn't buy Perplexity. I'd go out and buy a bunch of engineers, make a big splash about that, and I think that'll serve you pretty well also.
I think the argument that Apple historically doesn't make big acquisitions, and the biggest that they made was in Beats. With Beats for $3 billion. I don't think that works here. Yeah, they were able, through Beats, to advance the innovation surrounding Apple Music. Remember, everyone wanted to buy Pandora and Spotify.
I wanted to buy Netflix.
Well, that was streaming, and now you have Apple TV. But in this case, I think that this is nuanced.
What's the difference?
I think it's different.
No, I'm saying if you wanted Apple to buy Netflix for the Apple TV and streaming side, then how could you possibly, I'm not saying you are, how could you then make the analogy to this then? It seems like the same kind of conversation you would have.
Because when I was advocating for the purchase of Netflix, the stock was beaten up, it was down. Versus Perplexity, which is hyped up because there's so much VC. I was with the VC, large VC, and they said the only thing we're investing in is AI. We're going pre-seed, we're going concept, we're going seed, we're going round A. That is all they're doing. So there's so much hype driving those valuations. A company like Perplexity will only return capital to the investors in this round if they do another round, and it'll be a liquid, or if they sell. So there's no way to get it back on a fundamental basis.
Right, but they can sell, and that's why I think they could do this deal. And again, I don't think it would be any sweat off Apple's back, but I don't actually think anybody's not buying an iPhone because Apple's behind in AI. Like, I don't think people are really switching and saying, I'm going to go to another hardware platform.
No,
so
I don't think they're
this is
switching. I just think they're extending.
This is a stock issue versus a fundamentals issue for Apple.
Oh, I don't know. Maybe it's a combination of both.
Maybe.
We're going to take a break. Let's get back to our Megan Casella down in D.C. with the latest. Megan?
Got a few more details to bring you here on the ongoing situation in the Middle East. A source on the ground in Doha has confirmed to CNBC that they hear explosions in the sky over Doha. Again, that's according to a witness on the ground there to CNBC, confirming that there have been explosions. I'll caution, we do not know if those are from incoming missiles or from outbound air defense systems. It could be either one, but confirming there have been explosions now. A senior White House official has also told NBC News that the White House and the Defense Department are aware of these potential threats, specifically, again, to the Al Udeid Air Base, the U.S.-run air base in Qatar, and that the president is currently in the Situation Room, Scott, with the Defense Secretary Pete Hegseth, as well as the chairman of the Joint Chiefs of Staff, Dan Kane, and some other officials currently in the Situation Room monitoring the situation as it develops. So they are still planning a 1 p.m. national security meeting in the Oval Office as well, but for now, monitoring all of this from the Situation Room. Scott?
Okay, thank you for that update. That's Megan Casella down in Washington as we continue to watch all this unfold. The market's reaction to this is, well, we expected something was going to happen, and maybe it's not the worst of the options. And hopefully, whatever, if this, or we're talking about missiles from Iran being launched, that our air defense system dealt with that, and that no personnel, no American military personnel was harmed at all.
Yeah, the most interesting thing about this to me is that Qatar has been the home away from home for the heads of Hamas and other terrorist organizations. So they're going into their airspace and trying to take out American troops. Look, we were prepared for it. What they're going to fire are missiles that we can defend pretty easily. I think they've got to do something, but I should also think that you can't take comfort that it's not going to be a bigger retaliation, although I personally doubt it. This one's just for show.
Yeah. Crude oil is sort of sitting put. How are you thinking about how this might play out and how investors need to be thinking about all of this? Yeah,
I mean, again, I think if you want to invest in crude, which we're overweight energy and we like the space generally, but it's from a much longer term perspective, has very little to do, nothing to do with this conflict right now. I do think it's a good sign that they haven't gone after the energy infrastructure in Iran. We're not hearing anything about the Strait of Hormuz. So I think oil is going to probably escape this, but we're focused on longer-term fundamentals.
Bryn, I've got 30 seconds left. Why don't you give me a final trade as out of place as that frankly seems? I know our viewers care about that, and I'd like to give them that. Do you have a name?
Yeah, actually, the bug ETF. I think you have a secular tailwind and a cyclical bull market in cybersecurity. It's up 11.5% year to date. I think it continues to go higher.
Okay. You can obviously see we're talking defense and cyber,
right.
as you might expect from the final trades. We'll monitor the headlines, and I'll see you on the closing bell.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It is Monday, June 23rd. It's after the close. You can see all of the indices were actually up today. And we're going to take a look at the stocks and ETFs that they talked about on the halftime report. We'll look at the following. Let's take a look at that list here that I have. So we're going to look at BUG, CrowdStrike, Leidos, Fortinet. We'll look at the indices. We'll take a look also at some of the Mag 7 stocks, sectors that are looking pretty strong for tomorrow. Right, because we want to have an idea of what to be looking at for the next day, and what happened today. I mean, my assumption was that the oil stocks would go up. They did not. I think there was a lot of surprise in that. And part of it is, Iran's restrained retaliation, basically. And one of the parts of the article here, while Iran has flirted with closing the Strait of Hormuz, investors aren't terribly panicked about an oil market calamity, an equanimous view that's appropriate at this point. Geopolitical risks are undoubtedly elevated in the Middle East right now, but our view remains that the extreme asymmetry of the conflict, with Iran's military capabilities and those of its proxy partners significantly degraded, coupled with Tehran's relative isolation, with few, if any, allies willing to come to its assistance, and ample global oil supplies will help keep the fallout contained. So we'll see what happens there. But let's also take into effect that this just started, right? So they might be also planning at potentially attacking other bases, right? So it says here, to be sure, Iran could target other U.S. bases or close the Strait of Hormuz, which would, majorly disrupt global oil flows. Okay, so that is still a possibility. And I don't know if you guys heard over the weekend, Marco Rubio called for the Chinese government to step in and prevent Iran from closing that key trade route. But China remains Iran's most important oil customer, so I don't see China coming to the rescue of the United States here. All right, we'll see what happens. I mean, who knows? The world is kind of a little crazy these days, obviously. Let's look at the stocks within the S&P 500. You can see that Microsoft was up 1.8. Tesla was up 8.23. Big move up for Tesla. Real estate stocks did well. Utility stocks did well. Basic materials. But as you can see, energy stocks were down today. The financials did pretty well, but Google and Amazon were down. And so was Amgen, Gilead. And so let's look at the sectors. There you have it. Energy down 2.35%. All right, that's the one-day performance. Now, consumer cyclical, real estate, basic materials were the top three performers. Let's take a look at, we'll start off with the indices here, and you'll see the S&P 500, the SPY ETF, was up 0.99%. But as I've said before, it hasn't really taken off for a little while. It's consolidating still. Nothing major happening. That's a weekly chart. Here's a daily. It did pop back above the Tenkan-sen, the 9-period moving average on the Ichimoku indicator. So there might be, now we might see a potential move back up to the 613.23 to retest that. That is about 2% away from where we currently are. That's the all-time highs. We'll see if we can get there. The QQQ ETF, that one also, after 3 days of pulling back, found a little bounce here, up 0.91% today. Got back above Tenkan-sen. How far is it from resistance? Just about 1.7% at the 540.81 level. Dow Jones was unable to. Okay, so the DIA ETF was an up day. It was up 0.94%, but you'll notice it stalled at the 200-day. It stalled at the Tenkan-sen, the 9-period. And we still have resistance at 428.65. So there's a lot of resistance there for the Dow. Russell was up 1.22%, the highest out of the indices. That one actually did break through the Tenkan-sen, but it's about just 1.66% from this prior high. The other thing I don't like about the Russell is you'll notice down below here with the directional movement index on the daily chart, the ADX is starting to move up a little bit, and the negative DI is also moving up. Positive DI is moving down, so that's not really conducive to a continued move up. We'll see. Maybe we'll get 1 day up. It will stall at the 200 and then pull back. The VIX dropped down 3.83%, but found support right at the 200. So ideally, we want to get under that Tenkan-sen, the green line right there. We want volatility to come out of the market. We'll see if that can happen tomorrow. FEZ, the Euro stocks, interestingly enough, now take a look at this, guys. It basically gapped down in the morning and then quickly recovered, as you can see, breaking back above that 57.67. So it was under that 57.67 support level briefly, and then it started getting bought up. Let's take a look at something else. The weekly time frame, and you'll notice that it came back under there. Now, did it break and close above that 9-period? The answer is no, not yet. So the conversion line, or the Tenkan-sen, is at $58.11. This is at $58.01. It's still under but this candle is still basically forming, right? It's the weekly candle, so we won't know what this looks like until Friday. All right, let's take a look at the CNBC stocks that they talked about. Here's cybersecurity ETF BUG Bug, the Global X cybersecurity, and this consists of a lot of stocks that are in the cybersecurity space, including Checkpoint and CrowdStrike. You see FT&T is in there, a whole bunch of stocks. And just recently, now this was also Brin's final trade. Here's the weekly chart. It's it's going to find resistance around 36.80, and here it is on the daily chart. Basically, it was under Tenkan on Friday. It popped right back above it, but stalled at these little highs here. So I don't know what's going to happen there. CrowdStrike on the daily chart also kind of stalled. You can see at these prior highs. Okay. It's a stock that I actually have in my portfolio, the Blue Cloud portfolio. I added this one back on May 22nd, and it's up over 12% right now. I'm still holding on to that position. That's the daily chart, and here's the weekly. Josh Brown was recommending this back on April 10th. LDOS, Leidos Holdings, on the weekly chart. And by the way, you guys can also follow along with my trades. Okay, all the trades that I place daily, every day. I basically post them for Blue Cloud Legend level members. And to access those, you have to subscribe here. Click the subscribe button. And then once it gives you the option here to join, you select Blue Cloud Legend. And you'll be able to access the daily trade updates as well as the member videos, which you'll find right here. Okay, where I go over the entire portfolio every weekend. So, and I also provide 20 new stock ideas for the upcoming week. All right, let's go. Let's keep going here. LDOS is Leidos Holdings. This one is currently under the Ichimoku cloud, and that tends to insinuate that we are still in a downtrend based on this indicator. And it's not. It's bear. It's basically bearish. So I would not be adding any positions with Leidos based on the weekly. On the daily chart, it did pop recently above the Kijun-sen, but it's still under the 200. It's pretty weak still. FT&T, Fortinet, another technology sector, software infrastructure, one of those stocks in Bug actually. ETF. This one here did pop up 3.3% today, creating a bullish engulfing pattern, where this candle engulfs the prior red candle. But looking at the weekly chart, it's kind of consolidating still. There's nothing really special happening here. You can see that right there. We also took out this low, this prior low here. That's bearish. And so we've got, essentially we have a lower low, and we have a lower high right here from the prior one. So I would not be jumping into that one. All right, let's keep going. I'm going to talk about the stocks, except for the stocks that are in the portfolio that I share with the members, okay? So, NVIDIA. This was also Kevin Simpson's final trade back on June 18th. This one is looking more and more bullish every day. You can see the Tenkan-sen here crossing above the Kijun-sen. Price is above the Ichimoku cloud. But these candles are very bearish. They're not super bullish, right? They're kind of stagnant. And that's the weekly chart. Here's a daily. Nothing exciting. Stalling at this 146 area. Google has been dropping here on the daily chart. We created like a relatively bullish candle with that long lower wick there. But it was down 0.87% on the daily. Here's the weekly chart. Barely held up above the Tenkan-sen, but it's still under the cloud. So Google is not a place I'd want to be in currently. Now, Tesla was up 8.23%. Let's look at the daily chart here. It broke through that channel. Okay, so this is it's a bullish signal. Obviously, the higher volume right there, you get a positive DI crossing above negative DI. This is based on a lot of the positive news that came out recently on Tesla. Let's take a look at some of those news, actually. Let's go to FinViz, type in Tesla, scroll down. Deadline approaches. Let's see, what is it? Deadline approaches for Senate to cement Doge spending cuts. The Senate faces a rapidly approaching deadline to pass a law codifying 9.4 billion dollars in federal spending cuts by Doge, the cost-cutting task force formerly headed by Elon Musk. This is not good. The measure would claw back funding for AIDS prevention and public broadcasting previously budgeted by Congress. The cuts made by Doge created controversy over whether the president can refuse to spend money budgeted by Congress. The White House may use a different maneuver called a pocket rescission later in the year for the rest of the $180 billion in spending cuts. That's a really small dollar amount, that 180. I'm not sure why the stock went up based on that today. Are there any other positive news here? Okay, Tesla shares jumped most in 2 months on robotaxi rollout. Oh yeah, there's that. The robotaxi analysts 2 highlight. So basically, analysts 2 highlights from the launch. Let's see. McKaylee says there were 2 aspects of the launch that went better than expected. Oh, it doesn't really say. Okay. Anyway, we always try to figure out, like, why does the stock move up if it does move up, right? That's important. Let's keep going with the other stocks here. So Tesla, this is what it looks like on the daily. On the weekly chart, it's stuck inside the Ichimoku cloud still. If it breaks through, it might be giving us a new buy signal here. Personally, I'm not interested in buying this stock right now. There's just a lot of issues with the sales of the cars, okay, in Europe and other countries. The Ichimoku cloud is still bearish here. This could certainly pull back down under. We'll see. Amazon on the weekly chart, stuck right here, right above the cloud, but just consolidating for approximately since May 16th, so over a month now. It's around the same level, hasn't really moved much. On the daily chart, it's pulled back for 3 days in a row, finding support at the Kijun-sen. The Kijun-sen is that red line, 26 period moving average. Apple was up just 0.25% today, still inside the cloud on the daily, under the cloud on the weekly, so that's bearish. All right, let's go to the sectors. Now these are the strongest sectors here. The ones I've got highlighted here with the blue flag. Okay, so let's look at those real quick. GDX is gold miners ETF, and here's the weekly chart. It looks to me like it's actually building a nice little pennant pattern. Do you see this right here? Okay, so if it breaks through that little level there, I'd expect it to continue moving up. That's the weekly chart. Here is the daily. It came right back above the Tenkan-sen right there today. Now on Friday it was under. So it's kind of, GDX has not been moving exactly how you'd expect it to for the last couple of weeks. It's just moving sideways here. Industrials today closed above the Tenkan-sen. So but it's still under some resistance levels. In fact, I would use this high right here as the level it needs to break, which is 145.56 based on that little candle. So let me just fix that. There we go. So you can see that very tight consolidation right there. It needs to break through that level. XLK on the daily chart, also consolidating still. That's technology. Okay, nothing to do here. It's bullish because it popped back above the Tenkan-sen. It popped above the 241.88, but it has not taken out these prior highs. How about XLP? Consumer staples looks more bullish, like it has potential. Okay, so let's see here. Notice this trend line. Did it break it? No, it has not. So if it breaks that trend line there, then maybe we've got something. Price did in fact close above Tenkan-sen, Kijun-sen, and the 200 on higher volume, two consistent days above the 50-day moving average on the volume bars. That's good. And on the weekly chart, it's above the Tenkan-sen, Kijun-sen, and the Ichimoku cloud. The negative DI is still above, positive on the weekly though, and on the daily. That's why I wouldn't be jumping in quite yet. XLC Communication Services, we had a recent negative crossover here, but it did pop above today, above the 9 period. So that's concerning. Here's a weekly chart, still finding resistance at that around the 105 level. Utilities, Still resistance here under the 83.41, finding, I mean, these are just the strongest ones out of the bunch. This is a weekly chart. Here's a daily. They haven't really moved that much, but if you look at some of the other ones down below, they're even worse. So XLY, consumer discretionary, this one was up quite a bit, 1.77% today. I like the fact that consumer discretionary, you found support right there, and it bounced off that level here, there, and a fifth time. So you got 1, 2, 3, 4, 5 times where it found support at the 200, that dotted yellow line. And today we got a bullish engulfing pattern. All right, the bullish engulfing pattern consists of these two candles. I'm sure you guys are familiar with that already, but it's right here. That's what it looks like. Bullish engulfing. Small red candle followed by a large green candle that engulfs it. And the volume is increasing. So I like consumer discretionary here on the daily, and on the weekly chart, it looks like it's crossing. The Tenkan-sen is about to cross above the Kijun-sen. Price has found support at the cloud. Okay. The future cloud, the Senkou span A, which is the lighter colored blue line, is crossing above the Senkou span B. So consumer discretionary is starting to look interesting to me. SMH stalling. I think this one might pull back because, it's reached these highs here, and we're getting these reversal candles on the weekly chart, and here's the daily. So it's not super strong. How about gold? GLD. This one, so remember this downward channel, which was based on that bull flag that I mentioned pattern. It broke through, sorry, right there, moved up, came down, found support, and now it's bouncing again. So I think GLD should do well in this environment, and you can see the positive DI moved up, negative DI moved down. That's actually bullish on higher volume today, but it's still under Tenkan-sen on the daily. I'll just kind of briefly show you guys on the daily chart what these other stocks look like. XLB, you can see it pulling down under the Kijun-sen there. Bitcoin is inside the cloud right now. IBIT is inside this little downward channel. Real estate is under the 200. Copper not looking that great. Healthcare is not looking great. Financials popping above the 2 moving averages on the daily, but on the weekly, you're going to probably find resistance at 52.26. It's about 3% away. Energy. Now this is interesting. Look at the weekly chart on energy. It last week it closed right at the bottom of the cloud. Okay, today, this week, it moved up a little bit. It gapped up a little bit on the fears from the, what occurred, right? Because if we look at the 3-minute chart on this one, you'll see that little pop up. Here we are on the 23rd. So it moved up. So there's the opening price, and then it started dropping, right? So you can see the decline here in energy. Will this, will there be a continuation? I don't know. I mean, it's down 3.32%. I certainly wouldn't be adding positions right now, just to because the momentum is also starting to stall here. But all it would take is more bad news, of course, coming from the Middle East regarding the oil supply, and that could change everything very quickly. We're still above the Ichimoku cloud here. We still have a bullish cloud on the daily chart. On the weekly chart, though, we might drop a little bit more, maybe another 1% or so to the moving averages. XHB is the home builders. That looks very bearish still on the weekly chart. You can see this downward channel that we're in. Oil K, crude oil strategy ETF without having to report the K1 form. This one here also stalled right at the top of the cloud and dropped. Quite surprising that oil, typically it does well in this type of environment, but it's just one day, right? So it's just one day, and maybe the analysts have it wrong, and we'll know, I suppose, by the end of the week what's going to happen there with the oil stocks. But right now, I'm looking at the technicals, and the technicals are saying, hey, there was a lot of selling taking place here. So it might be short-lived. It might be just a little pullback, and then it will take off again. We'll see. And guys, guess what? That's going to do it for this video. Thanks for watching. If you liked what you saw, hit that like button and subscribe. Remember, it is free to subscribe, but if you want to get access to the member content, you do there is a fee for that. So let me go back to this again. Right, there'll be a subscribe plus button. There used to be a join button, and there you can see that subscribe plus button right there. It's kind of interesting. And once you become a member, right, once you do become a member, there'll be a new tab that pops up over here called membership, and that's where you'll find my posts, my daily posts on my trades. Okay, have a good one, guys. I will catch you in the next video.